Hello traders and welcome to today's daily watch list. You have no idea what just happened to me. I just recorded an amazing 18-minute long daily watch list video for you, and I forgot to plug in my microphone, so there was no sound. So I'm gonna do it again, but I think it'll be a little bit shorter. But I'm going to go through everything that I went through on the first time, right? So let's start by looking at the U.S. dollar. The U.S. dollar on the hourly. Let's start by looking on the hourly. Very non-directional, choppy. Past a couple of days. Well, since the beginning of the week, after that big push up late on Friday. We have had zero, but absolutely zero direction on the US dollar. Pretty hard to trade, in my opinion. We did profit from this spike yesterday, but as you can see, price just was unable to stabilize above that 90.60 level. And the downside is being capped by the weekly pivot. So until we get a clear direction in this market, I think we're not going to be trading the USD. And remember that today we have FOMC day. Big day. We have the federal funds rate decision and the statement on monetary policy. Now, it's pretty expected that the Fed is going to maintain the interest rates close to zero, and it's going to maintain the pace on its asset purchasing program, right? So it's expected that there's not going to be any tapering on this big round of quantitative easing. Now, having said that, what's going to be very important today is the FOMC statement on monetary policy. Why? Because if the Fed hints a little hawkishness, right, in the language of that statement. When I say hint a little hawkishness, I'm telling you that if the language of that statement hint a possible rate hike in the future, it doesn't have to be the near future, in the future, and if it hints rising interest rates. It doesn't have to say possible rate hike in the future. It just has to say that the Fed is looking into acting on rising inflation. You can understand that what they're saying is that they're looking to hike the interest rate in the future, but they're not going to say that, right, on the statement. That would be irresponsible. But the thing is that if the language on the statement is hawkish, or just a little bit hawkish, we're going to have a break a clean break of that 90.60 level. Now, so having said that, it's my opinion that just by looking at this contract, right, this is the target rate probabilities for, this is for the September 22nd Fed meeting. You can see that the 93% of the probabilities is that they're going to be maintaining that interest rate towards zero, and of course today's is the same 93%. So I don't think that they're going to be hinting. I don't know. Actually, I don't know what's going to happen. Maybe they're going to hike they're going to hike interest rates out of the blue. Who knows? But the probability is that they're not. And the reason is that, this is the inflation rate on the United States. As you can see, inflation has been rising. It has been rising a lot, but it's still at 5%. It's still at 5%. So I don't think that they're going to address it. Now, so having said that, if there is absolutely nothing at all on that FOMC statement and the Fed maintains its current pace on this round of quantitative easing, then we're going to have a red day on the US dollar, right? The bet that I have, or the trade that I have on gold, let's have a look at gold, right? This is the daily chart in gold, just by looking at technicals, like I have been telling you, you trade what you see, and what I'm seeing is a pullback. structure right here, a pullback structure in the US dollar. Continuation patterns, pullback structures, right? The impulses are to the upside. So technically speaking, I'm positioning myself on the buy side on gold based on technicals, but also because of rising inflation in the United States. I don't think that inflation is going to be coming down anytime soon. And if you know, when inflation rises, normally gold prices follow. So this is a chart that I wanted to show you. This is the 10-year break-even inflation rate in blue and the gold prices in red. As you can see, from this is from what February 2009. When inflation rises, gold prices follow, and when inflation falls, gold prices follow, right? And this big rise in inflation, or this steep rise in inflation in the US, and this is what I'm looking at. Actually, let me show you this part of the chart, just this part of the chart, right? So gold prices spiked to all-time highs, right, in August last year, and then started to decline, right? And inflation continued to rise. It's continuing to rise non-stop, and that moving gold is clearly lacking, or the last moving gold is clearly lacking. So that's my whole rationale behind this market, right? Again, this is just a probability, a possibility, as a possible scenario, but this is what I am looking at. So on the 4-hour chart, still looking at that flaggish formation, in gold, being capped to the downside by the 1845 level, right? And if you notice my oscillator on the downside, I don't trade divergence, but I do have an oscillator on my chart because this is a flag to me, right? When I have a big bullish move like this one, right, and I look at the first low of the move and the current low of the move, and I see my oscillator at the very minimum, right, printing a massive bullish divergence, I know that I might find a very high probability setup, and I know that because I have done the backtest on this exact setup, and it's super high probability. Now, having said that, there is absolutely no setup today to go long on gold, right? Maybe after the release of the FOMC statement and the federal funds rate decision, if the US dollar dips, gold might break with this, again, pullback formation after this big impulse on when was it? That's on Monday, right? So I will be looking, maybe. I mean, I won't be looking for that, but you might want to focus on the 1870, right? A break of yesterday's highs, right? Price stabilizing here, and boom, a spike towards that weekly pivot for a quick in and out on this market. Now let's have a look at Bitcoin. So Bitcoin on the daily, I'm still looking for that breakout in Bitcoin. Yesterday's candle was a rejection candle. Today we haven't seen clear bearish momentum that could trigger a pullback from this level. So on the 1-hour chart, what I'm liking about this market or about this price action is this, right? After that big first impulse, that this flag broke, and then we have this one that, well, we had kind of a false breakout yesterday, but if you notice, yesterday's lows are holding extremely well, and The actual level that I'm looking for, I mean, to take if price breaks with yesterday's lows and this level right here, I will be taken out at a profit because my entry is all the way down here. But it looks very bullish. The impulses are to the upside, and this choppy range looks nothing more than a continuation pattern to me. So heads up to that in Bitcoin. The pound versus the US dollar. The pound played us dirty. Yeah, but you know it happens, right? The pound faked out of the bottom of the range, right? But what I don't like about jumping in right now is this, you know, these previous highs. I mean, the weekly pivot is clearly capping the upside on the pound, you know, I'm still looking for that break of the 142 142.25. Still looking for that break of the 142.25 for a big continuation on this massive rally. Let me show you on the daily. I don't think that we can actually. Yeah, I have to go even higher. Maybe the weekly. Yeah. So on the weekly, this is what I like about the pound, right? Yeah, I know that we have this big level right here, the 143.80. But I mean, if we have a breakout of the 142. What was it? 142. Let's call it 142.30. I don't know. You know, momentum is strong enough to the upside that we break with this high. The next key level is all the way to the 150, and that, my friends, is what I'm looking for. That's why I had that big position on the pound. I got taken out just like you. But we will be looking for that trade. That you can bet on. I mean, the US dollar yen non-directional yesterday. I mean, after the first impulse, you know, this was clearly a US dollar driven trade because, well, that move to the upside was just this spike that you can see here on the DXY. So that's why we decided to close that trade. Because, well, we had no direction. There was no direction in the market. Our stops were in profits, but I decided to close it at yesterday's highs. What else can we look at? I mean, I'm not even going to look at the Euro USD. That's, I mean, I'm just going to show you. You know, that's the weekly. The daily on the Euro USD, I mean, yeah, we are kind of at a support level on the daily. Looks good on the daily, but if we go down on the 4-hour chart, it looks less appetizing. I mean, there is no level here to trade from, right? Maybe if we get a pullback down here to the 2070, we can get some bullish momentum, right? But the hourly is looking dire for bulls. Clearly, I mean, the hourly is looking dire. This is looking like a bear flag that is about to break. But you know, that's the Euro USD. The pound yen. Yeah, the pound yen. I mean, the pound yen is still inside of that pullback formation. Again, we had another fake out. Just the past 4-hour candle. Faked out of that flag again, but momentum is still to the upside on this market, and I'm still holding that trade with full risk on, stops below all the way here, because if you look at the daily, I mean, price action gives you clues, right? This rejection of the 154, I'm sorry, 154, let's call it 154.45, right? This rejection is massive, okay? Yeah, there is some bearish pressure to the upside, more so because we are very close to that key level. I'll show you because, and again, we have to go to the weekly to see this. Right, so this again, big level. Again, we are very close to that big level. So we are going to get some bearish pressure. And I know that some of you might say, why are we looking to buy so high on the move? Well, that is what I am seeing on the chart, unless we break, let's go back to the daily. In my opinion, unless we break with these lows and this formation right here, buys are the way to play this market. There's no setup to go long. Again, very choppy right now. And I don't think that we're going to get a setup. To be completely honest, I don't think we're going to get a setup. If we look at the hourly, yeah, it's extremely choppy, and what's complicated about this is that the ranges of these pullbacks, these bearish rejections of that flag formation are very deep, right? We're talking about let's have a look from yesterday, from high to low. We're talking about 95 pips, right? And today we had another reject. Well, today's range is clearly an inside range at the moment, right? And Mondays it's 100 pips, right? Today today's range is about 49 pips, so I do think that we have another 50 pips to go. I hope it's to the upside finally, but we don't know what's going to happen. Maybe when we break with these highs, the 156, we will look for longs. But yeah, that is the what's the pound yen, and yeah, that's me. I don't think that I forgot anything, and if I did, well, I'm sorry, because I unplugged my mic. I hope I did this time. So trade safe today. FOMC day is a big day. There's still a long way to go. It's 3:33 a.m. here, and the release it's at noon my time, so we do have about 8.5 hours to go. But if you look at this, look at the ranges on today's. Just the only winner is the US dollar CAD. That's good for us, right? But yeah, there's absolutely no trading range today. Look at the GBPUSD, 0.01%. Yeah, so we're going to keep it tight. We made a profit yesterday, and we don't want to give anything back. Cheers.